Hey everyone, I'm Doug Ross, residential mortgage lender. Wanted to talk a little bit about bank statement loans today. Kind of a unique niche product out there. It's a great fit for folks who own their own business. So this is going to be for folks who are, first off, self-employed. Okay? So what that means is that you own at least 25% of the company, or it's a sole prop, right? And so as long as you are self-employed, right, and you've had that business for 2 years, right, then you are a great candidate for a bank statement loan. So why would you use a bank statement loan? So bank statement loans, well, first off, one of the advantages to owning your own business is what, right? You get to write off a lot of expenses. And at the end of the year, you got this gross that the company made, you write off all the expenses that aren't taxable, and then you're left with this net taxable earnings at the end of the year, right? So that's great because you can lower your tax bracket a lot and it works out great come tax time. The problem is the mortgage industry uses that net taxable earnings as your qualifiable income to get a mortgage. So if you have a business that you're writing off a lot in expenses, right, it becomes very difficult to get a traditional mortgage because your actual net at the end of the year isn't high enough to handle a debt to income ratio for that kind of house, right? So this becomes a great loan product because on the bank statement loan, we're not looking at tax returns, right? We're not looking at W-2s. All we're gonna do on a bank statement loan is we're gonna look at deposits, right? These are deposits that have been made into a business bank account. And it's gotta be consistently in one business bank account for the last 12 months or the last 24 months. They have 12-month bank statement loans, they have 24-month bank statement loans, right? Now, what we're doing is we're looking at the deposits over time and we're going to take a 2-year average of those deposits, and that's what you get as income, right? We're not looking at write-offs, we're not looking at anything like that, right? All we care about are deposits into your bank statement, hence the name, the bank statement loan. So you get folks that have, a lot of write-offs that couldn't qualify for much, be able to qualify for a decent-sized mortgage on the bank statement loan product. Couple of things on the bank statement loan product. First off, higher down payment, right? So on a bank statement loan product, you're looking at least a 10% down payment requirement, right? Now that can come from a business account, right? We just need some additional documentation to source everything. But ultimately, you're looking at anywhere from a 10 to a 30% down payment requirement on your bank statement loan products. Obviously, the more you put down, the better rate you're gonna get. Rates are going to be a tick higher on your bank statement loans. Whenever you get outside of your normal Fannie Mae, Freddie Mac products, the rates start to reflect the risk level on an investor. So higher down payment. Also another big thing to look at is commingling, right? If you are using a personal bank account and you're putting some income from your rentals and your business into that same thing, we can't have that, right? And it becomes a nightmare trying to separate all that out. So you need to have a designated business account, and into that account go all of your business earnings, and that's the account we use to average out over the past year or 2 years in order to make this loan happen. So understand this is a great loan product. You got to have owned your own business for at least 2 years. We're just looking at deposits that we're averaging, and you do have to come up with a slightly higher down payment. So any questions at all, feel free to contact me. Again, Doug Ross, residential mortgage loan officer, and my number is 916-259-6302. Thanks.